Hey everyone, and welcome back to another pretty good day in the stock market. We've got some green across the board for the tech companies. Healthcare ones are back in the red today. We do have, I think, a congratulations for Palantir shareholders back to all-time highs, over $300 billion in market cap and $128.2 per share at the time of making this video. Now in today's video, I do want to touch on a specific company, Sea Limited, reported earnings before the market opens. Another great quarter by the company. I do believe that the stock is up 150% or so in the last year and a half since the start of 2024. So we'll go over those numbers, and I also do want to touch on the CPI numbers from this morning. So stick around for all of that. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. And if you want to support me even further, do check out the link down in the description. And in the pinned comment, you can the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so Sea Limited back to $152. Actually, since the start of 2024, the stock is up over 230%. So my mistake there. Year to date, the stock is up 45%. It has a market cap of $84 billion. Margin-wise, gross margin 42.8%. It takes the last 4 quarters. EBITDA 6.3, net 2.6, free cash flow 17.6%. If you look at the growth rate revenue-wise, forward 2 years, 22%, EPS 96.1%, growing the top line, but also growing the bottom line much faster, basically becoming more and more profitable. That was the issue previously with Sea Limited. If we zoom out a little bit, of course, I mean, the pandemic brought this thing to extremely high multiples, extremely high valuation, and then the stock did crash, I believe, over 80% or so. The problem was, of course, deceleration in growth and them not being able to become profitable. Of course, that changed, and that's why we have seen this nice little reversal since the bottom, I believe, mid $30 or so. Now, before continuing, like I said in yesterday's video, so today we've got the CPI report. On Thursday, we will get the PPI report, and then on Friday, building permits, housing starts, and that useless Michigan consumer sentiment survey. So the CPI report came in this morning, better than expected. So here you got the numbers across the board: food and home, energy, gasoline, electricity, everything that you need is here. So you can pause the screen and look at each and every category. If you just want to look at the, headline numbers, it came in at up 2.3% versus the expected 2.4%. 2.8% here is basically the core inflation. Looking at the month over month one, it's up 0.2% versus the expected 0.3%. And then if we look at the 3-month annualized change in April core CPI, we're back to 2.1%, which, if we're being honest, is not that far from where we've been historically. And so here yet again, I guess the data tells us something, and the scary headlines for the last couple of weeks told us something else. Interesting how that works out. But of course, a lot of lagging data here. So we'll see what happens 30 days from now with maybe a bit more impact from the tariffs, etc., etc. But so far, so good, I'd say, because we've had a couple of reports in the last couple of weeks. Everybody thought that this was going to be Armageddon, the end of the world, Black Monday, etc., etc. Well, it was not that bad, far from it. So yeah, moving on to Sea Limited. So pretty strong quarter, pretty strong performance across the board. E-commerce GAAP revenue up 28% year over year, down 3.8% quarter over quarter. Q4 is usually a strong quarter. Digital financial services loans principal outstanding up 76%, 76.5% year over year, and up 13.2% quarter over quarter. Digital entertainment bookings is up 51.4% year over year and 42.8% quarter over quarter. Incredible growth and recovery there. This is what has happened with the business over the last couple of years. Like we just said, e-commerce increased 28% year over year for the quarter, financial services 58%, and entertainment just 8%, while gross profit increased 44% year over year. Now you can clearly see that the digital entertainment segment did peak and then some during the pandemic, and then it has been quite a slow decline. Hopefully that will start to reaccelerate pretty soon. The financial services one is growing and growing quite rapidly. And as we've seen with other companies that do try to do the same thing, we know that at first financial services starts small, doesn't really contribute that much to the bottom line, to margins. But as that scales up and becomes a bigger chunk of the overall business, we know that that's a pretty good business to have. Example, Mercado Libre. And so all in all, we've got this GAAP revenue of $4.8 billion, gross profit of $2.2 billion, operating income $456.4 million, and net income of $410.8 million. Of course, huge improvements. Same story here for adjusted EBITDA. This thing goes up and to the right, and so does adjusted EBITDA as a percent of GMV. Now, with regards to Shopee, the e-commerce side of the business, they said the following. They delivered record high GMV and gross order volume in Q1. Average monthly active buyers on Shopee grew by over 15% year over year in Q1. They remain confident of achieving full year GMV guidance of around 20% with improving profitability. They also told us that ad revenue grew over 50% year over year in the quarter. The enhanced monetization driven especially by advertising. Unfortunately, I did not hear anything about tariffs, and looking at the results right now, no change in outlook here as well, means that, well, this is a pretty stable business at the moment. Then if we look at Shopee e-commerce GMV, since let's say September quarter of 2023, that has grown at a compound annual growth rate of 26.5%. E-commerce orders have grown at around 25.7% during that same period. Looking at money, which was previously C-money, now just money, just like Shopee. GAAP revenue and adjusted EBITDA. So GAAP revenue of $787.1 million and adjusted EBITDA of $241.4 million. They said the following. Loans principal outstanding grew over 75% year over year. They've added over 4 million first-time borrowers in Q1. NPL 90 plus ratio relatively stable at 1.1%. I do believe that that's coming down. They continue by saying, we remain confident of achieving guidance of loan book size to grow meaningfully faster than Shopee's GMV annual growth rate in 2025. Moving on to Garena. Free Fire remains one of the largest mobile games in the world with high user engagement and acquisition. Garena total bookings grew 51% year over year and adjusted EBITDA grew 57% year over year. Free Fire continues to be the world's largest mobile game by average daily active users and downloads. They remain confident of delivering their guidance of double-digit growth year over year for Garena's user base and bookings in 2025. So this is what we're getting here. Quarterly paying user ratio was basically flat for quite a while. Well, that changed in Q1. That's now at 9.8%. If we look at quarterly active users, that has also grown nicely this quarter. But of course, we're still far away from the peak back in 2021 when it comes to quarterly active users or quarterly paying ones, but we're definitely far away from the bottom here, December 2022, March quarter of 2023. Bookings for digital entertainment reached $775 million, GAAP revenue $496 million, and adjusted EBITDA of $458 million. And here, if we look at adjusted EBITDA as a percentage of booking, is now at 59.1%, a nice jump from the 53.3% a quarter ago and 57.1% same quarter a year ago. So all in all, definitely a very good quarter from C and for its shareholder as well. We can clearly see this was the bottom right here at around $40. It did drop below $40 a couple of times, and then on the way up, we did test the 200-day moving average twice. Actually went under, not for long. This is a weekly candle, so went under, went back up, went under once again. Actually, at the start of April, we're at $100 or so. So the stock is up over 50% since the, April lows, which was probably during that Liberation Day week. So yeah, I mean, next time it retests the 200-day moving average, if the business continues to do what it is doing right now, I'd say it probably will be a buying opportunity. But of course, if we zoom out, well, we're still far away from the highs here, 2021. I mean, this was just crazy, not just for C, but for every other stock out there. I mean, we are definitely slowly but surely making our way back there. The business is, of course, doing very well right now, becoming more and more profitable, which is definitely the most important part. So congratulations to all of you shareholders. Again, it's one of those plays, just like a Mercado Libre, just like a Grab, where you're getting exposure, yes, to familiar markets, but these types of players are very much focused on, well, in this case, Southeast Asia, Brazil. With Grab, it's Southeast Asia. With Mercado Libre, it's Latin America. So you are diversifying, let's say, your exposure, not only United States or not only just Europe or maybe China. No, Southeast Asia here, bit of LATAM there. So yeah, congrats to all shareholders. It definitely has not been an easy couple of years, but I'd say the last two has been, or the last 1.5 has been quite something. I don't know how many of you still own it, but if you do let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye bye.